how to invest if a recession is coming, okay? What we're gonna be covering today is what a recession means for real estate. What would that do? We're gonna go through the different types of recessions that can happen, the best investment strategies during an actual recession. But before we jump into that, it's really important as real estate investors or aspiring real estate investors to realize you're always gonna have one of two problems. And remember, whoever can solve the most problems is the one that makes the most money as a real estate investor. That's what real estate investors do, is they solve problems, okay? But you're always gonna have one of two problems. It's gonna either be easy to find deals and hard to sell them. Easy to find, hard to sell, okay? Or it's gonna be hard to find deals and really easy to sell them. So no matter how you look at this, you're always going to have a problem. It's either gonna be easy to find, hard to sell, hard to find, easy to sell. Those have an inverse relationship, and you're going to be battling one of those on some degree as another. Now, it may not be as drastic as it has been recently of hard to find good deals, but it's still going to be there. So it's important to understand how to make money as a real estate investor regardless of the market, no matter what the market is. Do I really think there's going to be a recession? This is my personal opinion. My short answer is no. I think we're going to see, the long and the short of that is, interest rates continue to rise, housing demand will remain strong. There's serious need right now for some affordable housing. What the government's been doing is saying that leftover COVID money, you go ahead and use that for affordable housing, which is kind of interesting. We'll see how that happens. But basically half the country, maybe a little less than half the country, we're expecting to see a 1 to 5% increase. And the other half, we're expecting to see a 1 to 5% decrease. This is not some massive change. It feels quite a bit different when we were going as fast as we were. 20% increase is crazy, but I don't see this as a bubble like 2008. Now, I'm not an economist. I'm not even that smart, really, but I don't think you're going to see that. And most economists, the majority of economists actually agree with me. The thing that's a little interesting is you hear these headlines all the time, and the headlines always say gloom and doom, and they leave it at that. So something to be thinking about. While real estate organic price strengthens means it's unlikely to crash, this also means it's more resistant to the downward pricing pressure a recession could otherwise cause, according to Investors Place. An economic downturn should theoretically make home prices cheaper. However, the drastically undersold real estate market of today means home prices are somewhat immune to contradictory forces. There's a couple of different recessions here, and it's important that you understand the difference between those and what they mean. Types of recessions: there's what's called a boom and bust recession. There's what's called a balance sheet recession. There's a supply side shock recession. There's what's called a V-shaped, a U-shaped, a W-shaped recession, okay? There's also what's called an L-shaped recession, a K-shaped recession, and a normal square root recession. And you're gonna say, Ryan, why do I need to know this stuff? And the short answer is you don't. But I want to point out here that there are multiple different recessions. We saw one that was driven by real estate in 2008. We've seen something that's happened because of the dot-com bust, which is going to be part of our boom and bust. There's also the inverted square, or the reverse square root, known as the inverted square. So different things are affected differently depending upon what type of recession it is. And I can tell you this, no matter what, there are going to be things that are thriving. If there's a recession, not everything's going to be thriving, but there will be things that thrive during a recession. You can think about, how well Zoom did when COVID hit, right? Like, they were thriving, although a lot of places weren't. There's always something that's going to be thriving. So that's what you want to be looking for. If there is a true recession that has an impact on real estate, values will go down. They just will. If real estate values go down, you have to change your strategy. You got to change the strategy if values go down. Rental properties or BRRRR. That's a big thing. Rental properties or BRRRR, that's what you want to be going to. If you want to get into rental real estate, you want to get in as fast as possible for as little money as possible. And if there's a recession, the other thing that usually happens is interest rates will go down. The Federal Reserve comes back and says, oh man, we're going into a recession. We want to boost up the economy. Great, we're going to bring interest rates down so we can encourage people to borrow and spend. And then if house prices are coming down and interest rates are coming down, it's a perfect opportunity opportunity to get into the long-term rental game. That's exactly what you'd want to be doing. The time to buy is when there is blood in the streets. The time to buy real estate is when there's blood in the streets, is what he was actually talking about there. But what happens to real estate rents during a recession? If there's a recession, what happens to rents? Well, here's my experience. Rents stay close to market rates in 2008. People were losing their homes and needed good term rentals. They needed something that was less than their mortgage. The demand could go up for the right properties. Now, this shows you from 2005 to 2010, rents went up. You can see here, let's just look at the 2005, 2010, 2011. So 2005, 2010, you can see the rents actually went up. And that's interesting. I think that's really interesting. This is the historic trend for median rents. If you come and, man, I need to get my pointer working here. If you come to 2008, somewhere in here, let's just call it 700, you can see over 09 and 10, rents just went up, okay? This is during the middle of a real estate recession. So rents, depending upon the property, can go up or most likely will go up. If there's a recession, I want to be in mid-grade single family houses in good neighborhoods. Okay, that's where I want to be. Properties, I don't want to be in a recession. I don't want to be in commercial. I don't want to be in high-end homes. I don't want to be in like Airbnbs either, just for the record, but I'm not into those anyway. So if there is a recession, it is time to go shopping. So if there is a recession, I would be so excited because I would go and buy potential properties and I would buy every one I possibly could. Now, hard money is going to be the most important relationship you have, and here is the reason why. You're going to want to do what are called BRRRR deals, okay? You want to get qualified with a hard money lender, then you want to get qualified with someone that can do what's called takeout financing that's going to refinance the hard money lender. Remember, hard money lender is short-term, higher interest, but will do things and move faster than a traditional bank could ever do, or even lend on properties that a traditional bank couldn't. So here's the acronym for the BRRRR. There's buying the property, there's rehabbing and fixing up the property, there is renting the property with the hard money lender's approval. The payments typically have to go to the hard money lender to pay down your loan, and then you've got the refinance, which gets you into a long term. Now, why does somebody want to do this? It's because you can get into a property with little to no money down. Rather than putting 20% down, paying for all the repairs, you're getting one loan. Depending upon how good you're buying that property, it may give you the money for the repairs and the purchase, and then you're refinancing because the property value has gone up, and you're refinancing because you now have income coming in from the tenant that's actually in there. So this is how it works. Most lenders will do 80% of the value of the property, right? Lender may lend you the rehab and the purchase like we talked about. And if they won't, you got to find a better deal. Or if it's worth it to you, put some of your own money into that. Then you can do what's called a rate or term refinance. Rental property income increases your debt to income ratio, so it increases your income ratio so that you can afford more debt. I don't think that's where we are. I just want to make this really clear. I don't think we're going into a recession at all. I don't think we're going to see it in the next 2 days. Or 2 days. I don't think you're going to see it in the next 2 years. So if we do, you now know how to set yourself up for long-term financial success. If this goes into a recession, which I don't think it's going to, this is what you do to set yourself up for long-term financial success. So let's kind of just recap this. What have we learned? What a recession means for real estate. What happens to real estate during a recession? Well, rents go up. That's interesting. Values go down. That's interesting. Interest rates go down, which can make it more cash flow as you're seeing rents go up. There's different types of recessions, right? So not all recessions are the same. There are many different types, and some areas are affected and other areas are not. It's important that you realize that. The best investment strategies during a recession is going to be buying properties, doing BRRRR type deals, and the most important relationship you're going to have is with your hard money lender.